Hi there, this is Aubrey Chauke. I'm a tutor for accounting, business studies, EMS, as well as research. If you're watching this, you're definitely at the right place. Please don't forget to hit that subscribe button on your bottom right. And once you're done with that, you can definitely make sure that you leave your comments on the comment section. And once you're done with that, you can definitely make sure that you also tell your friends to watch this video, to like this video, and to also subscribe to this channel. And this will help us to be able to grow as an online learning community. If you're in Hammarskrall, I'm pleased to let you know that Y Education SA is hosting some contact lessons that are taking place at Tusanang Daycare Center next to Mabuatlo Primary School. And all you have to do to become part of us is to pay a once-off fee of 100 Rand. And from there, you'll be expected to pay 250 per subject per month. So if you want to become part of us, on your first month you're going to be paying 100 Rand of registration plus 500 of the 2 subjects that you would have chosen. If you want to join us, you can get in touch with us by using the contact details that will appear right on the screen. If you want me to become your online tutor, I'm pleased to let you know that Chauke Tutorials is hosting some online lessons that are taking place on a daily basis. And all you have to do to become part of us is to choose a subscription that is suitable for you, pay it, and then request your lesson. Once you are done with that, we will be able to give you the lesson of your choice. On online lessons, we only have 3 packages that are available, and you can choose any of the packages that I'm going to mention. Package number 1, it's only 350 per month, and you'll be getting 2 online lessons that are recorded as they occur. So you pay 350 per month, you get 2 online lessons per week, which are recorded as they occur. Package number 2, it's only 250 per month, and you'll be getting 1 online lesson that is recorded as it occurs, plus 1 pre-recorded lesson per week. Package number 3, it's only 150, and you'll be getting 1 online lesson that is recorded as it occurs per week. If you feel like online lessons are expensive for you, I'm pleased to let you know that we also have got contact lessons that are also taking place on a weekly basis. And if any of these options that I'm going to mention are suitable for you, please choose it, pay it, and get in touch with us so that we can be able to make your academic problems a thing of the past. On package number 1, it's only 450, and you get 2 contact lessons per week. Package number 2 is only 350 per month, and you get 1 contact lesson per week. Hi there, welcome to the new lesson of the week. In this episode, we're going to be focusing on how to complete or how to prepare the ledger accounts. We're going to be using the information from the subsidiary books that are given to us and use that information to prepare the ledger accounts that we are required to prepare. We'll only be focusing on the trading stock account in this lesson. As you can see here, that we are required to only do the trading stock and also the sales. Here they are saying we should only focus on balancing the trading stock, meaning that the sales account, you just have to transfer information. There are no marks given for you balancing it, so you don't have to balance it. So first thing that you need to know is that you need to check specific information that the period, which period am I preparing my ledger accounts for. Here they're saying that the information that we're given is taken from the books of the traders for the month ending 31 July 2017, meaning that the focus in this lesson will be on the month of July. So we'll be using the information from transactions that took place in July to be able to prepare the ledger accounts using the information that is captured from the subsidiary books. And then we'll only be focusing on the trading stock account. If you look here, you'll realize that the marks for this trading stock account is 17 marks, meaning that you'll have a lot of work to do. You need to understand what exactly are you doing. You need to understand how we are transferring information from the subsidiary journals to the relevant ledger account. Here we are given the opening balances. If I was you, I'll make sure that each and every time when I'm given an opening balance, I transfer it immediately to that particular ledger account so that my work can be easy. So here we having the opening balance for trading stock of 20,600. So what we can do is to just transfer that opening balance. So we're going to have balance brought down here. Remember, trading stock is an asset, hence it is on the debit side, and then our balance brought down is 20,600, and then you get your particular mark for transferring this information. So you need to make sure that you understand how we do these things. So we have already used this part, we are done with the opening balances, and then from there, the other thing that you're given in the cash receipt journal is that you need to think about what happens when we sell. How does this affect our trading stock account? If you see here, we have cost of sales, and cost of sales is in a relationship with trading stock. So we need to ask ourselves, what happened to trading stock when cost of sales increases? Remember, when we record this, we're saying that we are debiting cost of sales. We are saying that the expenses for selling increases, right? And then we're saying that we are crediting trading stock because stock is going out of the business, so we would have trading stock being credited. So from here, we're going to go to the credit side of trading stock and have cost of sales. Remember, here we have debited cost of sales, and then we are saying that trading stock has got to be credited. So what happens here is that trading stock cannot be credited by trading stock, so we have to credit by the alternative account. The alternative account is cost of sales, so we're going to have cost of sales on the credit side. Here would have cost of sales, and remember, this is from the CRJ, so you must write that you got this from the CRJ, and the amount that we have is 7,000. Okay, so we're going to record that 7,000 here. We're going to write that 7,000 here, and you're going to get a mark for just writing this. So we are done with the first part, the subsidiary book that has been affected. We are done with it, we've already used it. Let's go to the next subsidiary journal, and you can see here that the next subsidiary journal is the cash payment journal. If you look at this, you realize that we have purchased trading stock for cash. So each and every time when you purchase trading stock for cash, it means that our trading stock increases. So we must show that we have purchased stock. So you're gonna come on the debit side, and right, remember here it's going to be July 2017 31, and then you would have bank, because remember we are buying stock on cash. So this will be from the cash payment journal, and the amount that we are given here is 17,900. So we're going to have 17,900 here, and then you go to the other subsidiary journal that we must use. If you see here, we have the debtors journal. Remember, in terms of the debtors journal, it means that you sold some goods to customers on credit. So the effect will be the same in terms of when you record for the part that affects the trading stock. So we're going to have cost of sales here, cost of sales, and then we would have the debtors journal, and then remember the amount is 4,400. So we're going to have that 4,400 here. You must remember that you cannot you cannot show the effects of the original account with the original account, meaning that I can't have trading stock crediting trading stock here, so hence I'm using cost of sales. And then we go to the next subsidiary journal that we have here. We have the debtors allowance journal. A person can ask a question to say, how does cost of sales in a debtors journal affect my trading stock? This normally occurs when customers bring back goods, maybe probably because they were not satisfied with those goods, so they'll bring back those goods to the business, and they will no longer owe us because maybe those goods are not in a good condition and they are not satisfied with them. So this will increase the stock that we are supposed to have in the business. So we would have, remember what happened here at first when we were selling. What happens here is that cost of sales has got to be reduced because customers are retaining things, so meaning that we would have credit cost of sales, and then we will debit trading stock, right? So meaning that the we are going to debit trading stock account by cost of sales. So we're going to have cost of sales on the debit side here. It's the same date, so we're going to just have cost of sales, and then remember this is from the debtors allowance journal, and then we would have that particular cost of sales that is given here, 200 in Dutch. And you continue with your information to check what else is relevant to us. If you look at the next subsidiary journal that we have is the creditors journal, and we are given trading stock, meaning that we bought something on credit from the creditors. So we're going to increase our trading stock amount. Okay, so we're going to have trading stock here being debited by creditors control. And then we would have creditors journal here, and you check the amount. What was the amount that we given? The amount here is 5,990. So we're going to have 5,990 here, and then let's check what else are we given that we must use. The next item here is from the creditors allowance journal. Remember, creditors allowance journal is when we are taking our stock, when we are taking our things back to the supplier. So we need to ask ourselves what is happening here. So we normally debit creditors control because we are returning things back to the supply, right? And then we'll credit trading stock. So meaning that on the credit side of trading stock, we're going to have creditors control. So we're going to have creditors control here. And remember, this comes from the creditors allowance journal, CAJ. Okay, let me maybe erase. Yeah, it was cost of sales. And then what's this? I think DAJ, something like that. Let me just check what was happening here. I forgot what I wrote here. Let's maybe confirm that particular amount, 4,400. Okay, it's from the debtors journal, so we'll just write debtors journal there. DJ, remember we sold things on credit, and then here it was supposed to be creditors control, and then CAJ, right? And then the next amount that we have there, I think we were dealing with this, so we need to be able to get that particular amount. So let's try and calculate it. So for us to be able to calculate it, we are going to say 1,155 minus 175. Sorry, no. 1,900 minus 175 and then minus 1155. Wagyu. I think there's an error here. Let's see. 1155 plus 175, it gives us 1130, and then 1900 minus, forgot the minus 175, then minus 1155, 570. So we're supposed to have 570 here, and it will make sense when we take this plus this plus this and this. It will give us 1.9. So maybe let's try and confirm that. 1155 plus 175 and then plus 570. Yes, it is giving us 1900. So we're supposed to have 570 here. Remember, we are retaining this stock, so we're supposed to have 570 here. And then from there you go to the next account and check what exactly are you supposed to do. We have petty cash journal, and from here we bought trading stock for 208, so meaning that our trading stock is supposed to increase. So we're going to have petty cash here. Remember, we can also buy things using petty cash, right? So we're going to have petty cash journal as our source of reference, and the amount is 208. And then you will realize that from there we have used every subsidiary journal that was given to us. So meaning that our information should now be complete. We just have to do our totals. Okay, so let's check which side is big. You can already see that this side is going to be small, so we can have our total here. And then on the 31st of July here, we can have balance carried down, since this side is going to be very small. And then we add the debit side because it is the bigger one. Okay, so let's check how much are we going to get. 20,600 plus 17,900 plus 220 plus 5,990 and then plus 280. We're getting 44,990. So that's going to be our total here. 44,990. So here's 280. So the total is 44,990. 44,990. So we should have on the 1st of the next month is August. On 1st of August 2017, balance brought down. Then we just have to get what is that particular amount that we want, that we're going to have as our closing balance, and then make it our opening balance. So if we take 7,000 and we say $7,000 plus 4.4 plus 570. Let me just check. I think it's 570. Yes. And then plus 570, we're going to get 11,970. So we can just write that on the bottom, and then so that we can remember 11,970, and then we check the difference between the two, and then from there we should be able to get what was the closing balance. So let's quickly check that. 44,990 minus 11,970 will get the difference, which is 33,020. So that will be our opening balance for the new year, 33,020. I mean, sorry, for the following month, because we are only doing this for the month of July. So meaning that this will be our opening amount for August. So you need to know how to transfer this information. If you want me to show more of this, please make sure that you book your lesson by using the details that I'm currently displaying on the screen to get in touch with me. And also don't forget to share this lesson with your friends. May God richly bless you. Thank you.